right. Happy New Year. Welcome to Options Tender. We had a wonderful year last year, and thanks for joining me in this brand new year. We're going to do the same thing all year long. It's a brand new YouTube channel, and I appreciate all of you that have subscribed and followed in my Instagram and Facebook. So if you like this, please press the like button, notification so you get all of the updates every morning and after market close on the weekends. And I'll give you some special bonus videos as well. So let's jump into it. So I've had a lot of inquiries on long-term stocks. And I've noticed that people on Facebook and Instagram are a little bit longer duration. They're those who are buying stocks and just doing kind of their own Robinhood or TD Ameritrade portfolios. And they're not controlling a whole bunch of money on there, and they're just trying things out. And they want to be long-term, so I have the perfect thing for you. We did 2 weeks ago an in-out spread, super conservative. It's just kind of one of those strategies where you place the trade and you also place the sell, and that's it. Then you let it work its magic. You don't have to do anything else. So if you're interested in that one, they're called in-out spreads. Just click this button right above here, the card, and that will teach you the in-out spread. But here is a duration position option strategy that lasts for months and years on end. So this is very similar to just holding on to the stock, but you're still leveraged, so you're looking to make more money for your buck. Okay, so right now we're going to check out SDC. We have this here. And the first thing that you look at when you're looking at a duration position is, hey, why am I buying this? Do I actually just want to buy the stock? Well, I may just want to hold the stock. You don't have to worry about time decay and all those things. But if you're looking to make some money, options are the key in this one. And this is real easy. You don't have to watch your position day to day. So SEC is a candidate that I've looked up, people have been talking about, and it has a beautiful chart. So we're going to go to, whoa, I want to change that. So we're going to go to the monthly because we want to look at the trend. It's not been around for a long time. We think this is going to go much higher, many dollars higher. So we want to look at the trend and make sure that it's headed in the right direction. Are we looking for a bearish trend or a bullish trend? Well, in this one, we're looking for bullish. And we're going to hold this for months and years on end. So at the monthly, is it bull? We have the MACD to show us. It made its bull cross already. We're headed to the upside. So we have plenty of room to go. Look, we're still in this bearish territory, but we're making a bull cross, and we have many months to go on this available. I want to say that the potential is there for many, probably years on end. So let's go down to weekly and make sure we're confirming the same momentum. Yeah, absolutely. We made a bull cross a long time ago. Had a bullish divergence for quite some time. And now we're popping to the upside. We're making a very cool formation. I love these inverse head and shoulders. It's the left shoulder, head, and right shoulder. So just a really good looking stock here. Okay, on the daily, we have pretty much the same story. Now, the momentum isn't skyrocketing to the upside, but it's because it's showing more of the pattern of what's happening. So you see the pattern getting tighter and tighter. Well, that's because we're going to get ready to move. Contraction leads to expansion. So on the daily, it's showing that contraction. So we're looking for a nice move to the upside pretty soon here. It's going to get tighter and tighter. I'm probably going to end up putting this position on myself next week or at the latest the week after. So we're going to watch this. You see the momentum cross to the downside. I'm not worried about that. We're in bullish territory, and I think we're just going to curl right back to the upside. And we can see that on the 65-minute chart. 65 minutes already made a bear cross to the downside, and it's getting ready to poke its head up back to the upside, which will cause the daily to start moving up. So looking good. This is a great positioning. Get it while it's low. Take your risk here because we're going to set our stop underneath this lower support. You see all the moving averages here. This is the daily chart again. You can set your stop under the 50 or the 100, whatever you choose to do. I'm gonna choose this trend line here because it's probably gonna form into a ascending triangle. And if it breaks down out to the downside, I'll get out of that trade. We won't worry about it. Now, if we break to the upside, we're moving. We're moving on up, and we're going to hold this. So let's go to our checklist. We have our directional bias. We're biased to the bullish end. We think it's going to go to the upside. We're going to go to the trade tab. We want to go 90 days out. I already have this pulled up. So this one here, February 19th, we have 47 days out. We don't want to do that. That's just not long enough. We're not giving ourselves enough time. So we want to go to the next one, 103 days out. Perfect. And when you get that far out, it allows you much more time for the stock to move. Like I said, this is a long-term play, and your theta decay out that long is much less. Theta, if you remember from any of the other videos, or you can look this up, theta is the Greek for time decay with options. There's two things that are enemy in this: time and price for your option. In this one, we want to take out that theta decay. So what we're going to do is we're going to go to something deep in the money. This purple area, that's all the strikes that are in the money. And in the black, that's all that's out of the money. So what's the difference? Out of the money, that's extrinsic value. That's just air. That's just value of time. So there's no real value in these options out here. And that's why they decay so fast over time. Once you get into the in the money options, there's intrinsic value. So these have real value at that point. We're going to go to about an 85 delta. That's this 0.86 here, 0.85, just right around that area. 80 isn't so bad. We want to stick to the 85. 90 is good too, but right here we got that sweet spot. So this is the $8 strike, the 85 delta. That gives us plenty of intrinsic value, so we won't have much, if any, decay throughout time. Okay? Now, for the liquidity, do we have weeklies? Yeah, we have weeklies on this one. So most likely, not always, we're going to have plenty of volume and open interest in this. You can see over here the open interest I have out here already. So there's thousands here. You're plenty of liquidity. So we're not worried about that. Now, if you don't have that delta option, if you go up here on Thinkorswim, you can press this button here, go down to Greeks, and there's your delta. You see any of these here can be changed. So if you're open interest, if you don't want that, you want to go, you can get any of the basic things. If you'd rather have volume, see what kind of volume's going in there, here's all your options here. Okay? Very good. What's next here? So we're deep in the money. We chose SDC. We have directional bias. We're 90 days out. We're actually 103. We have plenty of liquidity. We're deep in the money at 85 delta. We want to buy it. So you see your ask and your bid. There's a pretty big gap in between there. So we want to make sure that we do what? We want to work our trade. Always in Options Center, we want to work our trade. So when we go to the buy tab, it'll pull up. Let's change that price down to the bid at 425. We'll try to work it from here. If you're if you do not, or you're not able to execute at 425, just go up $5 at a time. 430, then 435, then 440 until you get the buy. Okay, we just want the best price. It's psychologically going to be better for you because you don't want to just buy it at 460, and as soon as you buy it, it shows that your stock option is worth $4.50. I mean, you're already in the hole. It's just psychologically better. Just work the trade. Okay, so now that you have the trade on, let's say we got it for $4.50. In other words, $450. Now what do? You just hold on tight for a long time. Unless it hits our stop, we just keep holding. Well, what if you get down to about 30 days? It's just going, let's say that the price is just oscillating over and over. I mean, for a long time, and it's just wearing out. If you're down to 30 days and your price has done nothing or just barely has gone up, because if it went down, we're going to get out of it, right? Yeah, we don't hold on to things past our stop. So if it's just, it's made a little bit of profit here, but it's decaying in time, 1 month out, roll it. So what do I mean by roll? In Thinkorswim, you can do everything all at once under one button. But essentially, what rolling means is just sell your position, sell the current position that you have, and then buy the next one with the same criteria. So go 90 more days out, 85 delta, and it's probably going to cost you about the same, plus or minus around the same values. So let's say your option is worth $600 right now. You're a little bit of profit. Roll it. Take that $150 off the plate. So roll it into 90 more days, about 450. We'll call it $4.50. 90 days out, and yeah, and then you do it again and again and again until you feel that SDC in this case has reached this limit. My gosh, it's at $100 now. There's no way it's going higher. We're getting out of this one. The MACDs, they're crossing over on the monthly, and the weeklies are rolling over. We're done with this one. We're spent. So just sell. Okay, now what happens if SDC pops out of this inverse head and shoulders and just bursts through within 2 weeks, and you have this huge profit? Your option's worth $2,000, and you still have 2 months to go. Take the money off the table. Okay, so roll it then. Go 30 more days out. Now, if it happens in 2 weeks, you may not go 30 days out. You may go a month out, another month out, but take some of that money off the table. Okay. So if this happens within 2 weeks and you have this huge profit, go to your trade test, sell your option, sell that $2,000 option, and go maybe just the next one out. Well, I'd probably hold on to it if you only had the option to do 194 days out. I would just hold on to it. Okay, so if we're 103 days out, 2 weeks pass, and there's no May options yet or June options yet, I would wait until they actually put those out there. So let a little time happen. If you want to take off the trade and sell it for a less steep in the money, you can do the same April 16th option. Just take some of it off and go for a lower strike. But me personally, it's not going anywhere. I would just hold on to it. Okay? So take any money off the table whenever you can. Take some profit, because we don't want anything bad with earnings coming up. We don't want to drop $20 and you lose a lot of your profit just because of earnings or something like that. So whenever you have a huge profit, take some off the table. Okay? Very simple. We'll go over this one more time. Pick a stock that has the MACD crossing on the monthly, weekly. They're all facing the same direction, okay? If you want a bear play, then the MACD should be headed down, along with the weekly headed down, and the daily headed down. Okay, and then you position yourself on the hourly. So you have your directional bias, and then expiration, 90 days out, 100's okay, 80's okay. And then make sure there's plenty of liquidity so you can get out of your trade. Deep in the money, 85 delta. Go to your tab. Make sure your delta's on there. Go to options, delta. All right. And then work your trade. Don't just get desperate and buy it at any price. You have time. You have plenty of time. That's what this is all about, is time. All right, and last thing is, once you have profit or you're running out of time, roll it, sell it, and do the same thing over and again with the same stock, um, So SDC in this case. All right. So if you like this, please press the like button. You don't know how important this is for us to get this information out to other people. And yeah, click the notify if you want to hear this information a lot more. Thank you for joining. This is another tool under your belt for all you long-term players that aren't trading every single day. So appreciate you. Happy New Year. Thanks for joining us here at Options Tender. Bye-bye.